And so the week ends with interest rates creeping up once again. And we saw that several times this week. And it was a bit of a surprise today, even though honestly, data from September, we're sitting in December. I mean, who really cares? However, PCE did show that inflationary pressures were easing a little bit, but traders did not care. All eyes are on what the Fed is going to do next week. And we're also going to get the last dot plot. Once again, a dot plot is where every Fed voting member gets to say where they believe interest rates should be going forwards, which is what traders are really concerned about. They want to know what the Fed is thinking, what members are thinking it, and where do we anticipate rates are going to go. So now, once again, it comes down to what's the Fed going to say, what's going to be their vernacular, and what is that dot plot going to tell us? That is going to be the leading indicators. The other thing that we're going to get next week is we're going to get some employment data. We're going to get job openings. It's the first major piece of data that we are going to get since the government opened from the Bureau of Labor Statistics. They finally got off their ass and they're going to actually give us some data that we can digest. And those job openings is what everyone is kind of anticipating. So, you saw some conflicting data this week. You saw ADP indicate that we lost jobs. That was backed by another third party, only for initial jobless claims to come in light. So you had that conflict there. You have delayed inflation data all the way back to September. So who the hell knows what's going on? So until all of this catches up, you see traders just sitting idle. They're basically saying, look, even though you are going to decrease the Fed funds rate another quarter, well, we believe there's still inflationary pressure. We're uncertain of what the job market looks like, just like you, Fed. And for that, we're going to sit, I don't know, between 4.05% and 4.15%. And we're just going to hang out there and we're going to kind of move a little bit until you give us some significant data. So that's the wrap for the week. We ended it on a higher note. I will say if you are in a position and you need to lock, I would highly consider doing so before that Fed funds meeting next week. If history tells us anything, we get a Fed funds rate cut and interest rates increase. So make sure you're in a position to do so. You need someone to talk to, just reach out. We'll love that opportunity. All right, y'all. My name is Kevin Weedmark, AKA the Mortgage Mouth, coming to you. Another episode of the Daily Dose. I hope you have a wonderful weekend. You need anything, do not hesitate to reach out. Would love to hear from you and would love to assist. Take care, y'all. Cheers.